All right. What's going on, everybody? Early morning crypto talk. Bitcoin Brandon here. Crypto is not going to pass me by. Good morning, everybody, on this Tuesday morning. You can type in the chat box on where you are logging in from. I see we have Mafuz from Maryland, Marty Juarez, Victoria, Texas, Bethany Gibbs, Seattle. I don't know that name, Ig Wiegler. I said that right. Denisha from North Carolina. Darnell from the OKC. Provis Lofties. I think Provis is from Houston, Texas, if I got that right. Mafuz. Stephanie Gibbs. Yashika from Georgia. Shauna Ross from Charlotte. Provis is Corpus Christi. Lashana, Richmond, California. Bill Childers, North Palm Beach, Florida. Anthony Pinkston from Philly. Hey, Anthony, you coming out? I'll be there at the end of the month. Courtyard Marriott. As a disclaimer, I'm not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestion, and it is up to you to find a nice direction you want to move into. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What is your plan? What are you willing to do to make it happen? Make a decision, take action, and stay focused. Do not get distracted. There's so many things out there that can distract you. You have limited resources. Now, this is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. All right, so let's go ahead and get started today. I'm going to turn on screen sharing so you can see what I am going to be reading today. Share screen. What's going on, Rigo G? Gina Ray? All right, first up, we're going to talk about the IMF, International Monetary Fund. And I need to put them in the chat box. Oh, no, I do that right here. Okay, let's talk about the IMF. The IMF says crypto growth could create vulnerabilities in the economy. Okay, let's see how. The IMF briefly cautioned on the impact of cryptocurrency as part of a new report on global finances. The body's World Economic Outlook, highlighting challenges to steady growth going forward, suggested a relationship between cryptocurrency usage and the economy becoming more vulnerable. Cybersecurity breaches and cyber attacks on critical financial infrastructure represent an additional source of risk because they could undermine cross-border payment systems and disrupt the flow of goods and services, the Outlook's authors wrote. Continued rapid growth of crypto assets could create new vulnerabilities in the international financial system. The comments add to the cautionary stance the IMF has previously adopted towards the penetration of cryptocurrency worldwide, formally advising the industry could reduce demand for fiat currency and forecasting international regulation being inevitable. That I agree with that. It's going to happen. Not anti-innovation. On the topic of regulation, meanwhile, the IMF last year nonetheless cautioned banks on adopting safety precautions against threats such as cybersecurity compromises at the expense of stifling innovation. Regulatory authorities need to balance carefully efficiency and stability trade-offs in the face of these rapid changes. Bitcoin is quoted staff as writing at the time. They need to be assured that risk to stability and integrity, including from cyber attacks, money laundering, and terrorism financing, can be effectively managed without stifling innovation. The IMF's perspectives appear not to be universally shared. In September, the European Central Bank conversely claimed that cash demand in EU member states was growing, while adding it had no plans to issue a digital currency of its own to circulate alongside the euro. The demand for euro banknotes continues to grow, and cash remains a popular means of payment. Yeah, today, the bank said, responding to a query on the subject. Moreover, there is an increasing range of options for digital payments, which allow non-cash transactions to be completed almost as immediately as cash transactions. So it's only a matter of time. When Netflix first came out, Blockbuster was king. People were still going to Blockbuster, still picking up their popcorn and their Twizzlers, walking up and down the shelves to find the movie that they want. And at the time, Netflix wasn't so popular because you had to actually order the movie, and then the disc would be shipped to you during a time where not everybody had compact disc players. They still had VCRs. You remember those days? So Blockbuster did not take Netflix seriously. Even when email came out, people were still writing letters and putting them in the mailbox. It took a little while for that mass adoption to take place. And that's where we're at right now. It's just exciting to know that we're at the beginning of this to take advantage. All right, here's another interesting one. Malta Prime Minister delivers landmark speech on the future of blockchain and cryptocurrencies. Malta's trying to be the world's version of Silicon Valley. And I'm going to got it on my little bucket list, but it'll happen sooner rather than later. I'm going to take a vacation in Malta. The Prime Minister of Malta, Joseph Muscat, sets the stage for a new future of possibilities. In his speech at the opening of this year's Delta Summit, Malta's international conference featuring fintech startups, blockchain entrepreneurs, and innovators in the crypto space, Muscat captures a movement that is uniting the world in ways that are more profound than the internet. It's certainly not just about money. On the strength of cryptography, blockchain is challenging democratic norms and the authorities that centralize data and power. The digital economy that's emerging will transform how we work and how we're governed. Muscat lays out why he believes the new tech is unstoppable. From Hong Kong to Helsinki, from Tokyo to Torino, from New York to Nairobi, it is quite rare that in meetings we attend, the same word elicits the same wide-open, wide-eyed, expectant, curious, and positive reaction. That word is blockchain. Oh, Provis, you've been to Malta? And it's time to go back. You need to go back now that it's a Bitcoin haven. Says that is a reaction I am pleasantly used to getting now. What is even better is that in all corners of the world, blockchain is now associated with another word, and that word is Malta. I am so proud of this. Rewind to 2017. I vividly recalled calling Sylvia Shimbri to my office and telling him that an essential part of his exciting new remit was to make Malta the first jurisdiction in Europe to have a comprehensive and sensible regulatory framework for distributing ledger technology. We were not the first out of the starting line. We had to make up for lost time and overtake competition. But as in any race, the winner is not who starts first, but who finishes best. Despite this intrinsic competitive spirit that we have as Maltese, it was very clear to us from the start that we did not want to sacrifice quality in favor of expediency. The United States hasn't even got to the starting block yet as a government. Choosing between being first and being best, we will always opt for the latter. In the case of the three pieces of legislation that form our innovative framework, we are both first and the best. I humbly submit first and best not only in Europe, as we wanted to be, but in the world where nobody expected us to be. Many of you here today, for what is arguably the most important gathering of its nature ever worldwide, come from the fintech and the crypto scenes. This is good. Nevertheless, to us, it is clear that the underlying technology that we are regulating has many more uses, most of which have barely been understood, let alone harnessed and utilized. Most of the time, we realize that history has been made after events happen. We are fortunate enough to be living in an era when we are aware that change is happening and that we are part of it. Let me stop right there for a second. That's an important statement right there. First, you have to be aware that it's going on. You can't play the game if you don't know the game is being played. That's like me hearing, oh, the Lakers, I finally heard the game. The Lakers are in town. They're going to be playing tonight. And I go to the Forum instead of the Staples Center. If you're in LA, you know the difference. Remember the Showtime Lakers? Magic Johnson from the 80s? That was at the that was at the Forum, which is in Inglewood. But where have the Lakers been playing for the last 15, 20 years or so? At the Staples Center in downtown. People don't even know the game is played or where it's even being played at. Malta is making themselves the playing field here. That's like I was looking at an old picture I was wearing, I think my 11th or 12th birthday, and I had a shirt on, Los Angeles Raiders. Los Angeles. It's been a long time since the Raiders played for LA. Things change. You have to be aware that it's changing. And then you can decide, are you going to be a witness to this change or are you going to be part of it? Those of you who are in our private membership group of KGX, I mean, I broke it down the last 2 nights. It was members only for you to understand and recognize the time we live in and the privilege that you have, that you can be a part of this right now, because there are going to be movies, books, documentaries written about this time 100 years from now. If you haven't, go to Netflix, not Netflix, it's on the History Channel, and pull up a documentary called The Men Who Built America. It's about America at the turn of the last century, the end of the 1800s going into the 1900s. They might not have known it at that time, but they were making history. What's going on, Mr. Stewart? We are living at that time right now, only it's tenfold bigger than the Industrial Revolution. All right, let me finish what he's saying. It goes without saying that this transition to the digital economy and society poses its challenges. It questions fundamental concepts that we have been used to for generations. One of them is the nature of work itself, its compensation, its efficiency, and its regulation. Those with a dim outlook will see this quantum leap. There's that word. Look at the words. Quantum leap. As a threat, because more machines will take the place of people. And this time around, machines can learn. Uh-oh, Skynet. Uh-oh, AI. Yes, the new digital economy requires new forms of social safety nets and a rethink of basic interactions. Nevertheless, not only can we not stop change, we have to embrace it with anticipation, since it provides society with huge opportunities. To do so, the state needs to be proactive in its role as a sensible, business-friendly, and consumer-centric regulator. We intend leading the way there. That is why artificial intelligence and a sensible, best-in-class regulatory framework for it are now next on Malta's agenda. Malta's trying to be the European version of Wakanda here. We are sure that with AI, we can replicate and improve what we are doing with blockchain. We are moving nearer to the demise of business models based on the centralization of data. Did you hear that word he's used? The demise of it. Blockchain, as you know, will increasingly give individuals more control. He didn't say governments. He didn't say banks. He said individuals, more control. In an era where the basic democratic norms are being challenged even in their cradle, we are witnessing the birth of a system that can democratize technology. The tension of the citizens being caught between the two will become ever more evident, making it crucial for governments to get up, to scratch with the rest of the digital economy and society. We are here to make it happen. We are as eager as you are. We are as excited as you are. We want to hear from you about your next big idea. We want to know how we can help and how we can make it happen. So welcome home. Welcome to Malta. Welcome to the blockchain island. Thank you. Where is my passport? I'm going to Malta. It's like Disneyland to me. He's speaking my language. Now it's time for the United States to do the same. All right, last article up. This is interesting to me. I'm just looking at the title. CNBC Analyst predicts Bitcoin price is about to explode, citing ETF buzz. Okay, I haven't read this article yet, so I'm going to make a couple of assumptions first. Number one, it has been proven that whatever CNBC says, the opposite happens 95% of the time. That is a fact. So anytime CNBC, Bloomberg, Fox News, Fox Business they say anything about crypto, you do the opposite of what they say. But times are also changing, and when times change and you have more adoption, the media slowly starts to get it right. So my first question before I even read this article is, who is the analyst? If it's an outsider that's not really tied to CNBC, then I really will pay attention to it. If it's an in-house analyst, then yeah, I'm going to go with the odds that 95% they're going to be wrong. There's that 5% they're correct. Well, let's see what they have to say. Cryptocurrency analyst Rand Nooner. I don't know him. Wait, he's host of the CNBC show Crypto Trader. Okay, he's been 95% wrong. But let's continue. He believes BTC prices are about to explode, citing bullish market buzz about the near-term possibility of an SEC-approved Bitcoin ETF. Now, the next one's coming up, I think it's going to be in December and then first quarter next year when the next ETFs, big ETFs, are going to pop up. He says, I just bought Bitcoin for my parents. It's too obvious that it's about to explode. Now, I do agree that it is going to explode. What I don't know is when it's going to explode. And that is right, crypto art. And as I stated at the beginning, I am not a licensed financial advisor to be dispensing financial advice. I read the news, give my opinion, share my suggestions, and it is up to you to make your own informed, intelligent decision on which direction to go in. But it has been a fact, CNBC has been wrong 95% of the time when it comes to crypto. But I do like the fact that he bought Bitcoin for his parents. Well, I was visiting my parents the other day, and I got on my mom because she broke from what she's supposed to be doing. Putting every week or month a certain amount, a little budget, into her Bitcoin and let it grow. You don't have to buy a whole Bitcoin up front if you can't afford $6,500. You can buy pieces of it and let it get up to that point. As I stated last night, $1,800 invested in Bitcoin puts you in the top 1% of the world's cryptocurrency earners or holders. There are more Bitcoin wallets in existence than there will ever be whole Bitcoins available, which means not every single Bitcoin wallet today can own a whole Bitcoin. And only about 8% of the American population owns a Bitcoin wallet. What do you think is going to happen if that number jumps to 40%, 50%? Not everybody's going to be able to own a Bitcoin. It will be extremely rare. So get it while you can right now. And so why I also said security is so important. If you've got 50, 100, 200 Bitcoin and more, you don't want people to know you have that. It ain't cool to go on social media bragging about how many Bitcoin you have. People ask me, Brandon, how much Bitcoin do you have? How much crypto do you have? Nothing. I don't have anything. Wait, aren't you Bitcoin Brandon? So? I'm not telling you what I have. All you need to know is I live off of it. That's all you need to know. I have enough that I don't have to work a 9-to-5 job. Countdown to SEC deadline. Nooner, the CEO of crypto investment firm On-Chain Capital, noted that around this time last year, BTC surged on reports that a cash-settled futures contract would launch. Nooner reasoned that SEC approval of a Bitcoin ETF would be much bigger news than a futures contract and would have a more dramatic impact on the market. Okay, all right, here's where I'm going to challenge him on this. Last year in December, there was hype on the run-up to the CME, the Chicago Mercantile Exchange, and the Chicago Board, the CBOE, that was going to add futures to crypto. And what we all thought was that by the big boys, the Wall Street investors coming into the space with the ability to bet on Bitcoin without actually having to purchase Bitcoin, where they can short it or go long on it, was going to explode Bitcoin to the stratosphere. Up to that point, there was a run-up. I don't know if it was because of this, the CBOE and the CME. But in November and December, it was like every other day, Bitcoin was adding another $1,000. The crypto market every 4 or 5 days was adding another $100 billion, all the way up to December 17th before it started to turn around. It got to $945 billion, the entire crypto market cap, somewhere around there. Don't quote me on that. Bitcoin was almost 20 grand. Ethereum, Bitcoin Cash was over $1,000 a coin. Ripple was over $3 a coin. Even Electroneum was over 30-something cents. I mean, it was party time. But as soon as the CME came online on December 17th, the entire market started to reverse. I believe it was market manipulation because the big boys came in and they immediately bet against Bitcoin since it was on the rise so that they could make money when the market dropped. And they purposely dropped the market down, one, to make money on their short bet, and number two, to start buying and hoarding up all the Bitcoin. They shook the leaves. The people who had no business being in this space only jumped on because they heard about Bitcoin keeps going up, I better get me some. They have no education whatsoever, listening to the media. And then they did the worst thing of all. Because it's not bad that you enter the market, no matter what the price is. That's okay. Even if you entered at $19,000 a coin. The worst thing that they did was they sold in a panic, thinking it was going to go all the way down to zero, and they were going to lose all their money. So they sold their Bitcoin at a loss. The only way you lose is if you sell your coins at a loss. No matter if the market goes up or down, you still have the same amount of Bitcoin. It's just what the value of it is. So when the market goes down, just sit on it. Sit on it. Wait for it to come back up. Or if you figured this out, move it to USDT, move it to Tether, and let it sit. And then when it bottoms out, move it back to Bitcoin and make more. I made a killing last year. I did that little trick. Once I figured out what Tether was, I was like, and I asked a question. I went to the coin market cap and I was studying this. And I was like, I don't understand why Tether, whether the market goes up or down, it always remains like even, 1-to-1. Tether right now is negative 10%. But when most of the market's in the green, Tether's in the red. When most of the market is in the red, Tether's in the green. So when I saw that trend, I started to do a little bit of research and figured out what the big boys were doing. They weren't selling their Bitcoin. Because I figured out something else. How to read this number. I'm still amazed by how many people in this space that have invested and made a lot of money don't know how to read this number. The total market cap of $220 billion. That when you see these go up and down, but you see this still remain the same, no new money is entering or leaving the space. People are just shuffling their coins around. So when I figured that out, I was like, okay, where are they shuffling their coins to? If Bitcoin is in the red and they're not selling their coins, and then I noticed Tether's in the green when Bitcoin's in the red. So they're moving their Bitcoin at a high from here. When they think it's about to drop, they move it into Tether, where it maintains the $1 value, dollar to dollar value. And then when it drops, they move it out of Tether back into Bitcoin. Now they have more Bitcoin than they did before they started. It blows my mind people can't figure that part out. I made thousands of dollars just by clicking buttons around and not ever selling my Bitcoin. All right, let me stop there. That's more of advanced training. Countdown to the SEC deadline. Oh, but my point was the entrance of the CME and the CBOE had the opposite effect that we thought. Bitcoin did not explode. In fact, it dropped in value by 70%. The entire market cap did. Now, we've got the ETFs coming on board. Exchange-traded funds. Again, you don't have to actually buy Bitcoin to be a part of the ETFs. But the ETFs is major. If you look at the chart of gold, when ETF was introduced to gold, gold skyrocketed. So there are those that say the same can happen to Bitcoin. I'm not ready to make that prediction. I don't know which direction it's going to go because I was off on the CBOE, CME. I thought when big boys come in, more money comes in, the price of the coin goes up. The opposite happened. So what's going to happen with the ETFs? I think there might be initial hype, but I don't know if it's going to be that spark, that trigger. I think the only way, personally, this is my opinion, the market has a complete turnaround and starts to explode is when those who are manipulating it down decide to reverse course, take their foot off the brake, and allow it to naturally blow up. And another reason why I believe that is because in the past, before the big boys were in town, the CBOE, the CME, the ETFs, and Bitcoin and crypto was all a natural occurrence based on supply and demand. Anytime you had good news out there, Bitcoin exploded. Anytime you had negative news, Bitcoin would drop. The last couple of months, it has been neither. It doesn't matter how much good news has come out. It did not affect Bitcoin's price going up or down. The only major thing I saw this summer, not even this summer, it happened last month, was when Bill Gates all of a sudden reversed course and admits that the Gates Foundation is backing a blockchain startup, I think it was Plaxco or something, with Ripple on the Ethereum blockchain. And a week later, Ripple jumped up by 100%. And then another 2 weeks later, it jumped up by 7%, 60%. But in all that time, this market cap did not explode. It's been hovering between 195 billion and 225 billion all month. I will start to get excited when I see this hit the $300 billion mark. When it gets to the $300 billion mark, you're going to see the price of Bitcoin will be closer to $10,000, be around $9,000 per coin. Why? Anything special happen? No, you just had more money come into the system. And since Bitcoin has a 52% dominance, if you add another $100 billion into the market, you're adding another 40 to 45 billion into the Bitcoin market cap, which brings that price up to around 9K. When you do this long enough and you're reading this long enough, you're able to kind of predict the numbers. So I believe when they take their foot off the brake, that's when the market is going to explode. And it's like a rubber band. Have you ever pulled a rubber band? It's resistance. And you hold it, and the longer you hold it, the more it's building resistance. Then when you finally let go, it snaps back. Same thing with our economy. When they hold the interest rates down for so long, the moment they release it, what's going to happen? It's going to snap. The U.S. economy will be in a downward spiral that takes place. But it is important you understand how to read these charts, read these numbers, know what they mean. I'm looking at this, and I see the entire market is flat. Now look at this, 11% Maker is up 11%. Ontology 7. See, anything stands out to me. Populous, almost 11%. 17% nebulous. What's up with that? Let's see, what is the salt coin doing today since they did make major news the other day? And I reported on that. Salt is still in the green, 0.17% over the last 24 hours. Currently at 6 cents. I'm sorry, 61 cents. And at its height, it got to, wait a minute, hit the wrong button. Linear. So at its height, it got up to over $14. So I'm not going to go back into salt again. You can go back and listen to my Facebook Live from yesterday morning to understand why this caught my attention. Again. Anyways, back to the article. Nooner reasoned that SEC approval of a Bitcoin ETF would be much bigger news than a futures contract and would have a more dramatic impact on the market. I don't know. I don't think so. We've had a bunch of good news. Hasn't affected the market in a positive development. Last year around this time, BTC went from $6,691 on November 11th to $20,000 December 17th in 5 weeks. Nooner tweeted this on the back of the expectation and launch of a cash settlement BTC futures contract. He continued, an ETF is a way bigger deal and requires actual purchase of BTC. 2 looming SEC decision deadlines ahead. I just bought Bitcoin for my parents. It's too obvious that it's about to explode. Last year, around this time, BTC went from $6,691 to $20,000 in 5 weeks. This on the back of the expectation and launch of a Bitcoin cash settlement BTC futures contract. An ETF is way bigger. That said, predictions by any crypto expert should be viewed cautiously because the industry is still young and unregulated. There are a lot of unforeseen factors that could affect price. Keep in mind that in February 2018, Rand Nooner predicted that BTC would top $50,000 by the end of the year. So far, it does not appear that this forecast is realistic given current market conditions. No, it is still realistic. Go back. If Bitcoin went from 6,000 to 20,000 in 5 weeks, then it is possible that it can go from 6,000 to 50,000 in 3 months. I didn't say it's probable. It's possible. Crazier things have happened in this industry. So let me go back. He says, for the record, I am pinning this tweet. Bitcoin will finish 2018 at 50,000. He said that in February 2nd, 2018. Meanwhile, the SEC has set a November 5th deadline to review 9 Bitcoin ETF applications, 9 of them. As CCM previously reported, some market experts predict that a Bitcoin ETF is likely to be approved in early 2019. In July 2018, the SEC rejected the Winklevoss twins' second attempt to launch an exchange-traded fund that tracks the price of Bitcoin. The exchange had rejected Cameron and Tyler Winklevoss' first such application in March 2017. While the virtual university market slumped over the summer, several key developments could be setting the stage for a near-term rally and a longer-term market run-up. Okay, let's see. What are those things? As CCN has reported, Yale University, whose endowment tops $29 billion, recently invested in 2 crypto-focused venture funds. In doing so, Yale became the first university endowment to invest in cryptocurrencies, and a sign that institutional investors are starting to embrace digital currencies as investment vehicles. While Yale's allocation in crypto is reportedly small, even a 1% allocation would approach a staggering $290 million. Well, we already know the number. They're putting over $400 million into this. Will Yale's investment in crypto lead to more institutional investors? That doesn't matter. That doesn't matter with the price of Bitcoin right now. But yes, it will. Analysts say Yale's foray into virtual currencies will undoubtedly trigger a chain reaction that could open the floodgates for other institutional investors to start pouring money into crypto funds. No, not yet. What's going to happen is all the other universities are going to start doing the same thing because they want to be competitive with Yale. So the millennials are going to be on this first. The big investors, they're not concerned about Yale. They're looking at their buddies in Wall Street. They're looking at the futures contract. They're looking at the ETFs. They don't care what Yale does. Investment herd mentality will take over. In April 2018, Ari Paul, the chief investment officer of crypto investment firm Block Tower Capital, said it was inevitable that several super rich universities would start investing in cryptocurrencies this year. I do think it's inevitable from a few angles, Paul said. Even if they never believe in it as an asset class, they're smart enough to recognize the alpha opportunity. Ari Paul, the former portfolio manager for the University of Chicago, said several pension funds and university endowments began researching crypto investments as early as 2015. Endowments could pull the trigger at any moment, Paul said. They're on the fence. All right. So that's all the information for today, Early Morning Crypto Talk. I hope you learned something new. As always, that is the point. I will be back tonight, late night crypto talk, 9 p.m. Eastern, 6 p.m. Pacific. And no, it will not be in the members only. It'll just be regular crypto talk. So again, I hope you guys learned something new. I'll see you tonight, 9 p.m. Eastern, 6 p.m. Pacific. Bitcoin Brandon out. Great day. Bye-bye.